Hello again, people. Right, it's Sunday morning, and Friday I took the day off. I took my normal Frankfurt and London Open trades, and then closed the terminal and went out for the day down the beach. So, but having said that, I took 9 times. I made 9 times my daily requirement before probably about 8:30, if I remember correctly. I need 5 pips to get going. 5 pips is what I require for a day's work, and then anything else is a bonus. So just to say that there's trades everywhere, and you mustn't. I used to struggle with fear of missing out, and really it was fear of missing out on earning anything for the whole day, which is why I limited my target, if you like, take profit to 5, and then everything just became very, very stress free. So I can totally recommend it to people. Anyway, getting back to charts, I thought I'd have a quick look at the what happened on Friday. Here's the ADRs for that day, and we can see there was plenty of overextended, so there was plenty of potential opportunities. I mean, this one's not only over the 14-day, but it's also over the 100-day 100-day average as well. Unfortunately, that's a default setting for this ADR indicator, which you can find if you look at my playlist videos on my YouTube channel. So and then just set it up. It shows you how to set it up on a blank chart as well. Just open any old chart and then get rid of all the colours on there and lines, so that all you've got is your ADR set up. So I might as well show you that as well while I'm here, because I've forgotten the name of it, to be honest with you. That is it there, display CC info, and then there are the inputs. A default set of currency pairs, which is that, and then you can add or take off any that you're not interested in, and the rest is pretty self-explanatory. So horizontal position, of course, and vertical position, and vertical spacing. So you can reset all of those to your own requirements. So anyway, back to the charts. A CAD. I think this is a belt and braces. When you get it above both numbers, you're going to get potentially a good reversal. But we never trade anything blind. All of these CAD and Swiss franc yen, looks like there was masses and masses of good opportunities. So let's just pick one randomly. EJ, I wonder what that did. EJ. Yep. So throughout the trading day, that's 8 AM if memory serves me correctly. Yeah, 6 AM I think. Can't really see it behind that. 08, so 2 hours difference. Yeah, that's 6 AM, and this is the sort of American session time. So in fact, no, that's midday. 14 is 12, so that's 12 midday. American Open is around here. So if we're tracking this up on a chart waiting for a reversal, then all we've got to look for, in my opinion, is put it on the 30-minute and watch for some redness here. In fact, that's set wrongly as well. Need to uncheck those two to avoid having this situation here. Just obviously not change this template properly. Excuse me. So yeah, first or indicator of a potential reversal when you are overextended like this is for a bar to close red. You must have it close red. It's no good if it's turning red, because it could turn back to green and then you're in trouble. Then what I want to see is a 15-minute reversal. So it must be red on the histo. You must have a 15-minute reversal. Which occurred, I have to check the open of that chart there. open 124998, 125, so that did actually break through there, even if the close hadn't. Notice that as well, 125002. I didn't know that, so oh, actually it's a 0.1 of a pip below the line, so that did close down. Then it gapped down a bit, looked like we've got this massive spike up and then push back down. So we're over here anyway after the closing bar. Well, in fact that's the new bar after the initial close. That's the pullback to test old support somewhere like this as resistance, which often happens, which is why you drop down the time frames and just watch what goes on. So just double check I haven't moved this over. In fact, there you go, see, that was important. So we actually this bar was the last 15 minutes of the previous 30-minute bar, if that makes sense. So that's the pullback, and now we drop to M5 to look for an entry on the RSI. And here's the RSI breakdown. Notice that's your pullback that we talked about. Here's your RSI bust, what I call the bust. Then you have a few bars messing around, and then you have the close, the break and close. That is our entry. You can drop down to the M1 and watch that, and even refine your entry even more, because there is really still nothing to stop this reversing and then trending back up. You know, it's all about high probability. So if you go onto the M1, which I do suggest you do, not only for the fact that it will teach you price action, you'll get a better indication. You could trade the breakdown there. Again, that's a risky strategy. I prefer to just watch the price action. So as you can see, now this M1 chart is showing a reversal. You know, it happens like clockwork, and you will notice that when you start. This has confirmed up now. That's the penultimate low, that's the ultimate low. That has confirmed against us. Now there's nothing, that is actually a trend. If you go down into the lower time frames, like the 10-second chart, say for example, which you can do, there is a piece of software, I keep threatening to explain how to do that, but then other things take over. But there is a piece of software where you can go to your offline charts, load up the software, and then get down into the tick charts, you know, 10 seconds, 20 seconds, whatever you want, 5 seconds. I haven't used it for years, but it's fascinating. So low, high, high, low, high, high, and close. So now we categorically should wait for a close, a reversal back down, which would mean we need to close below the low of that candle, and that was the close below, if my eyes are not deceiving me. And you will notice also there's a bust, there's a break and close. It's pulled back once again, and it's actually closed against itself. It wasn't ready to go. As I say, this is a sort of virgin chart for me. I hadn't looked at this, I just chose it randomly. And there is your final sort of swan song. This is what I used to call it. It's where they just push up. Obviously I would think this is algos doing this now, but you know, whether you've got stops here or not or whatever, it's pushed up and done its stuff, brought in some buyers, taken out some stops, and there you go with the break and close, and a new bust down, pull back, break and close with the 3 candle confirmation. And that is how you trade these things right down to the 1 minute chart. So you know, you might get a better entry, you might get a worse entry, but whatever you do, you can see now how this trend has flushed out all of the buyers. There is no, when you enter at the optimum point. That's all that's happening with these breaks, reversals, breaks, reversals, breaks, reversals. So, and then finally there's nothing left and the price will crash. That is why you can rely on tight stops, especially if you are looking at a reversal from the 30-minute chart right down to the 1-minute chart. Okay, thanks for watching. Have a good day.